Today, we are discussing 4 ETFs that I absolutely love in 2025. If you're ready to level up your investing game, grab a notepad and dive right in. First off, what is an ETF? An ETF is a basket of stocks, bonds, and other financial instruments that are put together and sold to you. You are going to pay a fee, which we call the management expense ratio. And you pay this to the lovely company that manages the fund. But this is not to be confused by the mutual fund. I do not like mutual funds. I'm not a fan. These are low-cost ways to invest that have really revolutionized the investing game. And just a few years ago, they weren't even available to us. I think that everybody should look into ETFs when they are starting to invest. Most people actually start by investing in individual stocks, but then after some time and after losing some money, they realize that they lack the skill set, the time, or the desire to manage their own investments. And then they typically end up investing in ETFs. So I'm gonna tell you my top 4. Okay, so the first up on my list is VCN. VCN is the ticker symbol, and this is the Vanguard FTSE Canada All Cap Index ETF. So what this means is that it gives you exposure to the entire Canadian stock market. So this includes big players like Shopify and smaller companies that you've probably never heard of. If you want a simple way to bet on Canada's growth, VCN is your perfect choice. So let me show you what VCN is and how it looks. This is on Google Finance. Over the past year, you can see that VCN is up by 22.44%. So it is a solid pick. Over the past 5 years, it's been up 46%, and over its lifetime, it's been up 105%. So it's a pretty solid pick, and you can't really go wrong by investing in the entire Canadian stock market because you can't do worse than the entire Canadian stock market. The management expense ratio for this ETF is 0.05%, so I would say it's relatively low. Now, I know you're thinking, okay, Reni, but Canada's economy isn't that big, and you are right. So I choose to personally invest in the Canadian economy to have diversity in my portfolio, but you are right, it's not that big. So that's why the next ETF on my list is perfect for US exposure. The next ETF I'll talk about is VFV. VFV is one of my favorite ETFs ever, and VFV tracks the S&P 500, meaning that when you buy this ETF, you are investing in America's 500 largest companies. So think of companies like Apple, like Microsoft, like Amazon. All of those companies are within that fund. It's like having a front row seat to the US economy without worrying about picking individual stocks. Personally, I have been investing in this consistently every 2 weeks for the past 3 or 4 years, and my portfolio is very happy with that choice. If you are someone who cannot invest in Canadian dollars, but instead you are on a platform that has only USD equivalents, don't worry, there is a solution for you. You just type in VOO on your app, like maybe you're in Nigeria and you can only invest in US dollars or Naira. Type in VOO and that is the US equivalent. It's basically the exact same thing, but in US dollars. As of today, which is February 8th, 2025, VFV is up by 27.92% over the past year, which is pretty great. Over the past 5 years, it's been up 94%. And over the maximum time that it's been around, it's been up by 520%. So as you can see, it's a bit more niche than the Canadian one that I mentioned earlier. And also the US stock market is the largest in the world, so it's more likely to grow. There is a management expense ratio, and that management expense ratio is 0.09%. Again, it's also relatively low. And this does pay a quarterly dividend, which is always nice to receive. I have lots of dividends that come into my account. I'll share some on the screen right here, but VFV is one of my favorite ETFs and one that I will continue to invest in for the foreseeable future. Let's go on to the next ETF, which is VTI. VTI is the Vanguard Total Stock Market ETF, and this one literally covers the entire US stock market. So large cap companies, mid cap, small cap, everything is included in that ETF. It's basically like VFV on steroids, giving you exposure to over 4,000 companies in the United States. If you want ultimate diversification, VTI is perfect for you because you literally have access to every single industry possible in the United States. And again, you can't do wrong with investing in the entire stock market. You can't do worse than the entire stock market. Personally, I would say I have a higher risk tolerance than VTI. It's a bit too risk averse for my liking, but I do recognize that many of my followers are beginner investors who want to start slow, and this gives you access to the entire US stock market. And again, you can't really do worse than the entire US stock market. over the past year, let's see how it's done. So over the past year, VTI has been able to get 20.46 growth over the past year. Over the past 5 years, it's been up by 76%, and over the maximum, it's been up by 415%. So again, some people's entire portfolio is just VTI because it allows you to have access to every single company in the United States. So one option for you, the MER is 0.03% as well, so relatively low. And I would say that most of these funds that I'm recommending to you are Vanguard funds, and the reason is because Vanguard is known for their low-cost ETFs. Finally, we have the one and only QQQ. This is Invesco QQQ ETF, and this is for those who are tech lovers. So what QQQ is it's an ETF that tracks the NASDAQ 100, meaning that you're getting all the big tech companies like Google, Tesla, Nvidia. They're all inside here. So if you are somebody who believes that tech is the future and you want to really invest in tech, QQQ should be on your radar. Personally, I like this ETF and I do invest in this ETF because it is highly concentrated in the tech sector, which I do believe is the future. I will say that if you are a new beginner, this is a bit more volatile because it's pretty concentrated. There are only 100 companies or so that are in this ETF, but with the recent advancements in AI and other sectors of technology, I would say this is a solid pick for the long term. Right now, let's see how it's performing. Right now, Invesco QQQ is up 20.83% in the past year. Over the past 5 years, it's up 128%, and over its max lifetime, it's up over 887%, which I believe is the highest of all the ETFs that I've mentioned today. So it is a solid pick and has great potential for growth, but again, remember, it's a bit more volatile than the others. It may be up sometimes, maybe down, all depends on how the tech sector is doing. The management expense ratio is 0.2%, which is the highest of all of them. So again, you're paying a little bit more, but the growth is worth it in my opinion. Make sure you do your research before you buy it, of course. Just to clarify, you don't have to have all of these ETFs in your portfolio because they do overlap each other. So VTI is the entire US stock market. So if you have QQQ and VFV, you're kind of overlapping because those are also within the US stock market. Personally, I have VFV in one portfolio and VCN in one portfolio. And then in my other portfolio, I have QQQ, the one that I take a bit more risk in. So you don't need all of them. Just choose the one that makes most sense for your situation. Maybe you've watched this video and now you're ready to buy your first ETFs. That's great. I'm excited for you. Let me know in the comments below if you will be doing this. The first step would be to open up your brokerage account. You can open with wealthsimple, TD Investing. If you're in Nigeria, you can open with Bamboo, you can open with Chaka. There are so many different platforms that you can open your investing account on. After you have your account open, the next thing you want to do is have a set amount monthly that you are going to use to purchase. So let's say you can dedicate $100 monthly to purchasing new ETFs, then automate that purchase so it goes into your account every single month, and then buy a fraction of the ETF that you want to choose. If you are investing on a platform that allows fractional investing, you can actually just buy $100 worth if you can't afford to buy the full ETF. If you want me to make a video on more niche ETFs, like let's say semiconductor ETFs or emerging market ETFs, let me know. I can make that video for you. And remember, please do your research before you purchase any stock or ETF. Let me know in the comments below which of these ETFs you'll be adding to your watch list. And don't forget to like, subscribe, and hit that notification bell so you never miss a video. Bye.